What's up, Frost fam? Today we're stepping off the day trade clock and into 4 leap setups. Long-dated call plays built for the long game. These aren't lottery tickets. Each one is a beaten-down name with a real turnaround story and a level worth respecting. Plan, not a prediction. Not financial advice, this is education. Let's get into it. So why leaps and why these 4? A leap is a long-dated call. You're buying time, not chasing a candle. That means you can be patient, size small, and let a story play out over months instead of minutes. Every name here got beaten down, based out, and is coiling near real support. We buy the hold, not the falling knife. First up, ticker CLF, Cleveland Cliffs. This steel cyclical bottomed at its 52-week low of $7.73, based out around the $9 shelf, and just ripped up 28% on the week to $11.93. The leap thesis is a steel and tariff demand recovery. We're not chasing the rip, we want the retest of the $11 breakout shelf. Here are the levels on CLF. Support sits at $9.24, with deeper support at $8.84. Overhead resistance is your first target at $13.99, then $15.35. Price is holding above the base. As long as that $9 shelf holds, the trend stays up. Here's the plan on CLF. Entry trigger is a reclaim and hold of $11. Your stop is $9.10. Below that, the setup is broken, so honor it. First target, $13.99. Second target, $15.35. Plan, not a prediction. Size small and honor every stop. Next, ticker INTC Intel. The foundry turnaround snapped from a $19 low all the way to $142, then pulled straight back to the shelf at $89.59. It closed the week around $92.32, down about 3%. The leap bet is that the AI and foundry story resumes, so we accumulate the support test. The levels on INTC. Key support is that shelf at $89.59. That's the line in the sand. Overhead, first resistance is $106.85. Then the old high near $142.35. As long as 89 holds, buyers still own this name. The plan on INTC. Accumulate into the support test near $90.50. Your stop is $85. Lose that shelf and you step aside, no arguing with it. First target, $109.61. Second target, the old high at $142.35. Buy the hold, not the falling knife. Third, ticker MU Micron. This is the HBM and AI memory supercycle name. It pulled back about 27% off its high of $1,255, down into the $840 to $900 zone, now trading around $920.95, up 8.5% on the week. The leap rides secular AI memory demand from support. The levels on MU. Support is $840.51, with a deeper floor at $804. Overhead, first resistance is $1,011.77, then the prior high at $1,255. This is a big dollar name, so position size matters more here than anywhere. The plan on MU. Entry is into the pullback near $900. Your stop is $790. Below the base, the thesis is simply wrong. First target, $1,035.50. Second target, the high at $1,255. Size small, honor every stop, let the supercycle work. Last up, ticker NKE Nike. A beaten-down consumer turnaround that's been coiling on its 52-week floor around $40 for 6 straight weeks. It's trading at $41.70, down about 5% on the week. This is a tight stop leap reversal. We want the range top first, then a longer recovery leg. The levels on NKE. Support is that floor at $40.69, with the hard line right at $40 even. Overhead, first resistance is $45.04, Then the range top at $46.31. 6 weeks of coiling on 40. The tighter it wins, the bigger the move when it finally breaks. The plan on NKE. Entry trigger is a push through $41.50 off the floor. Your stop is tight at $39.50. Below 40, the coil failed. First target, $46.31. Second, the recovery target at $68.49. Plan, not a prediction. Here's how you actually trade these. Leaps give you months, so buy in the money or near the money calls dated far out, and don't overpay for premium. Size small, one position should never blow up your account. Wait for the entry trigger, set the stop the second you're filled, and let the story breathe. Discipline over emotion every single time. Let's recap the 4. CLF, buy the $11 reclaim. INTC, accumulate the $89 shelf. MU, the pullback near $900. And NKE, the push through $41.50 off the floor. For stories, for plans, not predictions. Buy the hold, not the falling knife. Size small, honor every stop. Not financial advice. Frost fam, I'll see you on the next one. 3 rules every trade needs. Number 1, a target. Know where you're taking profit before you ever enter. Number 2, a stop loss. Know where you're wrong and honor it. Number 3, time is your friend. The best trades come to you, so don't force it. Let it come. Position sizing. Never risk more than 1% of your account per trade. Set your stop the moment you enter. This is not financial advice. Educational content only. Do your own research. Trade at your own risk. And remember this one. It's not about timing the market. It's time in the market. Nobody calls the top. Nobody calls the bottom. The people who win are the ones who stayed. If you guys like this content, follow, subscribe, throw me something in the comments. I'm here to help you guys. Happy trading, happy investing. I'm live every weekday at 9:30 Eastern. Come hang out.